Hi friends, there are millions of eyes watching the market. People are constantly analyzing, forecasting, arguing, but there is a tool that helps to see logic in chaos. It's technical analysis. Strifor is with you, and in this video we'll break down the basics of technical analysis and talk about the main concept, trends. But first of all, please subscribe to our channel and turn on notifications so that you don't miss other useful videos. Technical analysis is a way of predicting price movements based on patterns from the past. Simply put, if the market has behaved in a certain way in similar circumstances, then it can do so again. The oldest methods of analysis date back to the 18th century. Japanese rice traders developed the Keisen system, known to us as Japanese candlesticks. They used this method to understand when to sell and when to hold a commodity. Later, this approach spread around the world. And at the end of the 19th century, journalist Charles Dow formulated the basics of technical analysis, which formed the basis of his famous Dow theory. He highlighted the key principles that are still relevant for traders today. Today, thanks to technology, technical analysis has become even more accurate and accessible. Complex calculations are performed in a fraction of a second, and modern traders can analyze dozens of indicators simultaneously. Technical analysis is based on three key postulates. First, price takes everything into account. The market instantly reacts to any news. Any economic event is immediately reflected in the price of an asset. Let's suppose that in October 2024, Tesla presented the long-awaited prototypes of the Cybercab and Robo-Van at an event dedicated to robo-taxi. However, the presentation did not meet the expectations of many investors and Wall Street analysts. As a result, the company's shares fell by more than 9%. Or let's recall the wildfires in California that occurred in early 2025. They significantly affected the stock market, especially the shares of insurance companies, which had a negative impact on the overall state of the insurance market. Or another example, when the U.S. Federal Reserve announces an interest rate hike, it immediately affects the stock market. Some stocks rise while others fall. Second postulate. The market moves in trends. If demand exceeds supply, the price rises. This is an uptrend. If supply exceeds demand, the price falls. This is a downtrend. And when they are roughly equal, the market stands still. This is a sideways trend, flat. But how do traders understand that a trend has begun? They use charts, indicators, and patterns. For example, if the price bounces off the same line several times, this may signal a new trend. Or if trend lines converge, traders may expect a sharp price movement. Any trend changes sooner or later. Traders identify trends to predict whether it is time to buy or sell. However, it is important to remember that a trend does not last forever. Sometimes it weakens and shifts into a flat. Third postulate, history repeats itself. If we generalize, people have been trading the same way for centuries. In crises, everyone tries to sell. The market falls. When there is a hype, everyone buys, and the price rises. Greed, fear, excitement. These emotions control the market, and that is why charts often repeat the movements of the past years. For example, every time a financial crisis starts, we see massive asset sales. It happened in 2008, it happened in 2020 during the pandemic, and it also happened decades ago. There are also seasonal patterns. For example, in December, many stocks rise because of the holidays and increased demand. And in summer, on the contrary, the market often freezes because major players go on vacation. Summing up, technical analysis is not magic, but a tool that helps to understand market behavior. Understanding trends is the first step into the world of trading. Want to see patterns? Then study charts, follow price movements, and test your observations. But remember, technical analysis is just one of the tools. It does not provide a 100% guarantee, but helps to increase the probability of successful trades. Did you like the video? Give it a like and subscribe to our channel. There's still a lot of interesting content ahead, and in the next video we'll break down fundamental analysis. See you in the new episodes from Strifor.